Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I will be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the derivative data of Nifty, Bank Nifty as well as the different asset classes. Now, first of all, a general disclaimer, this video is only for the educational purpose. Please contact your financial advisor before investing. Now, straight away, let us go to the last to last video which we have mentioned. Uh, we have mentioned that markets are into a bullish trajectory. The current recent correction is just the pullback of the 90-degree move which we have seen in the last 15 to 20 trading sessions. Yes, the correction has been very sharp, and currently the Nifty has been quoting around the major support area which was earlier acting as a major resistance. So now, without wasting time, let us go back to the Nifty daily charts and let us discuss what could be the trend for the next week. So now let us go to the Nifty daily charts. I mean, Nifty daily charts, we have been seen that in the last almost 3 weeks, or maybe 10 to 12 trading session, we have seen the Nifty has witnessed a sharp correction. Now, let me draw a horizontal line so that we have a clear view of where the prices are currently. Now this is the horizontal line where the prices has taken a support. You can clearly see the RSI has also uh, it is in the comfortable zone still with negative signals on the daily charts, and on the daily charts you can clearly see that the Friday's candle, I have stretched this thing. The Friday's candle has been uh, an inside day candle. Now the trend deciding level for the Nifty would be the Thursday's high and low. The Thursday's high would be 19,766, and the lower side would be 19,523. Once these levels are breached on the either side, the direction will be seen in the markets. Now, as of now, the inside day candle is at least giving us a relief that at least the downfall has stopped, and we might consolidate. There is no follow-up selling as of now, and we might see a technical pullback from these levels. Last week was a monthly expiry. The rollover has been most probably on the short side. So maybe we might see a short covering rally from these levels. That cannot be ruled out, but that we will keep in mind, and we will look out for the trend, how it is going forward from Monday onwards. So as of now, the markets seems to be quite stable at these levels after the recent sell-off of last couple of trading sessions. Now, the most important thing which I would like to highlight is that in the US, there is a news, or there is a big, huge news, or a big news which is a price-sensitive news, that there is going to be the government shutdown for a couple of days or weeks. We don't know. We will come to know once there is a clarification from the US government. So this could impact the global markets, and that could be taken as a final blow on the markets, and then we might see the start of a rally from the lower levels. This is the only reason which I see that we might see a follow-up selling from these levels. If this is uh, done, if there is a US government shutdown for a couple of days or weeks, we don't know, then we might see further sell off. But as of now, looking at the last couple of trading sessions, the sharp sell off in the US market as well as the global markets, we feel specifically that this news might been have been discounted by the markets already. The damage has been done, and this news was already taken by the government, taken by the markets, and we might see a final blow in the or final sell off, and after that we might see a rally or a pullback rally, or a rally from the lower levels. So as of now, if we keep this news aside, yes, this is important, this will come in couple of days, but if we purely talk on the charts, we feel that the sell off has been done. Any dips should be used as a buying opportunity. This is what is looking at the inside day candle. Now, friends, let us discuss the important supports and resistance level for the Nifty for the next week. The first support in the Nifty is placed at 19,492. Below that, the second support is placed at 19,333. And below that, the third support is placed at 19,223. On the upside, the first resistance is placed at 19,766. Above that, the second resistance is placed at 19,848, and third resistance is around 19,991. These are the crucial supports and resistance level in the Nifty for the next week. Traders should watch out for a consolidation or a basing out formation in the Nifty, and if afterwards if we see a rally, then one should try to build long position. As of now, as I said, looking at the inside day candle, we feel that support could be seen at the lower levels. So one should not at least go short. One should have a wait and watch approach. Let the market to get stable and then build long position at the lower levels. Now, friends, let us discuss the derivative of Nifty calls. You will see on the screen the action in the Nifty calls. In Nifty calls, the action was seen in 19,700 calls, 19,800, 19,900, and 20,000 calls. Here you can see there is a slight drop in the option premium. Implied volatility is very low. It is between 7.65 to 8.03. The volumes are also on the rise. Open interest is also rising in a couple of strike prices. Looking at this particular data, we feel that on the immediate basis, 19,800 could act as a major resistance. If it closes above those levels, then there are chances that Nifty might rally towards the psychological mark of 20,000 mark in next couple of trading sessions. So as of now, the most important thing which I rely or I would like to put more emphasis is the implied volatility. The lower the implied volatility, the chances are that the market might rally from these levels. This is the only thing which I am putting more importance over there. So lowest the implied volatility, uh, higher the chances that market could rally. So looking at this data, we feel that the market might see a short covering rally because there is a huge short rollover in the October series. Now, friends, let us discuss what we have observed in Nifty puts. In Nifty puts, you will see on the screen the action was seen in 19,600 puts, then 19,500, 19,400, and 19,300 puts. Now, here, most important thing which I would like to important is a drop in the option premium. Now, drop in the option premium is clearly indicating that the smart money has started already writing the out of the money puts, which is a bullish sign at this juncture. Implied volatility is still low. It is between 8.67 and 10.32. And looking at this particular data, the important support is seen around 19,600. If it breaks, then there are chances that Nifty might take a support around 19,500 odd marks. So what I feel that if there is any kind of further sell off or follow up selling, then I feel that Nifty might get stability around say 19,500 or between 19,500 to 19,450. That is the area where one should try to build long position. So looking at the lowest implied volatility in Nifty calls and a significant drop in the option premium in Nifty puts is clearly indicating the bullish data at this juncture. So one should not go short at these levels. So friends, now let us go and discuss the Bank Nifty daily charts. In Bank Nifty daily charts, again, the similar kind of pattern was seen. Uh, Bank Nifty has already, you can clearly see, has taken a support, a long-term support of last couple of months, maybe from since March 2023. Bank Nifty has taken a support of this long trend line. RSI, yes, it is still negative, but again in Bank Nifty also you can clearly see it is an inside day candle. So, the trend deciding level in Bank Nifty for the next week is the high and low of the Thursday's spot candle. The high is 44,756 and the low is 44,248. These are the important supports and resistance level. Once Bank Nifty breaks the level from the either side, traders should take action. If it breaks the high, then one should go long. If it breaks the low, then at least for further sell off one should go short, but one should not wait for huge downside move. At least looking at this particular pattern, we feel that Bank Nifty might get stability at these levels. So now, friends, let us discuss the important supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is placed at 44,344 is the first support. Below that, the second support is placed at 44,182, and below that, the third support is placed at 43,830. On the upside, the first resistance is placed at 44,773 is the first resistance. Above that, the second resistance is around 44,999, and third resistance is around 45,384. These are the crucial supports and resistance level in Bank Nifty for the next week, and traders should try to just watch out these levels. Let Bank Nifty to get stable at the lower levels. If there is a further sell off or a fall up selling, uh, look out for the crucial support levels at these levels, around these levels. And if there is a pullback rally, then try to create long positions. So at this juncture, inside day candle is at least bullish sign, but for what we call a defensive trader, they should wait for a clear cut breakout of Thursday's high or Thursday's low, and then only trade accordingly. But frankly speaking, my view is that if there is a weakness, one should go long in Bank Nifty also. So now, friends, let us discuss the derivative data of Bank Nifty. Let us discuss, the calls of Bank Nifty. Here, the action was seen in 44,700 calls, then 45,000 calls, and then 45,500 calls. Here you can see there has been a drop in the option premiums, which means that the upside might be uh, locked, or we got kept around 45,000 at this juncture, because uh, the open interest OI is high at those levels. Implied volatility is between 9.40 and 9.57. It is still low. So again, implied lower the implied volatility, chances that Bank Nifty might also rally. But there is a drop in the option premium. That means that smart money is still short in Bank Nifty out of the money calls. At this juncture, once Bank Nifty crosses 44,700, where the open interest and the volume concentration is high, then we might see a sharp rally towards the level of 45,000. If it closes 45,000, then there are chances that Bank Nifty can see an extension of the rally towards the level of 45,500. So as of now, looking at this particular data, implied volatility is low in the favor of the bulls, but there is a drop in the option premiums, but the inside day candle is still indicating a bullish trend at this juncture. Friends, now let us discuss what we have observed in Bank Nifty puts. In Bank Nifty puts, the action was seen in you can call at 44,500 puts, then 44,000 puts, uh, and then 44,500 puts. Now here you can see there has been a significant drop in the option premiums. That means the smart money has already been into writing the out of the money puts. This is the bullish sign. Now here you can see the implied volatility is between 9.86 and 13.18. On immediate basis, the strong support is seen around 44,500 puts. Now here, if we see uh, 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 in 44,500 put, there is a concentration of highest open interest, highest volumes. If that is breached and closed, then only there are chances that Bank Nifty might slip down to the levels of 44,000, which is the psychological mark. But looking at this particular data, and most importantly, the drop in the option premium is clearly indicating the bullish sign at this juncture. So overall, as I said earlier also, that looking at the charts of Nifty, Bank Nifty, and derivative data of both the indices, only purely on this particular technical data and derivative data, we feel uh, the sell off is being done. Yes, another sell off or a blow cannot be ruled out, just only because there are news that the US government might shut down for a couple of days or weeks, that we don't know, that we will be seeing in the coming days from the media or So that what is going to happen in the US about government shutdown. If that thing happens, then we might see a follow-up sell-off, but that should uh, bring in markets strong support at the lower levels. As I said that earlier also, that that news has been already discounted in the global markets, because we have seen a recent sharp sell-off across the globe in the last couple of trading sessions. So that news is been discounted, what I feel, and we might see support coming in at the lower levels. So traders should not go short at these levels. Those who are short, just try to book profits if there is a further sell-off, and try to create long positions or build long position after the market gets stable at the lower levels. So, friends, now let us come to the final segment of our show, which is the positional call. I've identified one stock from the pharma sector. The name of the stock is Glaxopharma, GlaxoSmithKline Pharma. Let us go to the daily charts. Recently, the pharma sector has been into the limelight, and many stock has been giving a clear-cut pattern breakout, and the setup, which is clearly indicating that this setups is already poised for an upside rally from these levels. Now, this is the MNC Pharma. You can clearly see, it is a very beautiful rounding bottom formation. Again, you can call it as an inverse head and shoulder breakout. The volumes are coming on the right hand side. The breakout was seen couple of weeks, maybe 2 or 3 weeks earlier. Now we have seen a pullback, a decent pullback. The stock has taken a support around the horizontal neckline. Now again on Friday, the stock has seen some sort of follow-up buying. Now this is clearly indicating that stock is poised for an upside rally from these levels, and the stock might give a decent returns from these levels for short to medium term investors. Now the stock is quoting around 1548, the current market price. That means the Friday's closing. So now positional traders or positional investors, swing investors, swing traders, long-term investors can accumulate the stock in the range of 1548 and on corrections to 1520 for an upside target of 1715 in short to medium term. Now, short to medium term means maybe next 3 to 4 months of view. If anybody is have a view of investment of next 3 to 4 months, should have GlaxoSmithKline in its portfolio. Just buy and keep it. We feel that the pharma sector might see a decent rally in the coming days. So definitely GlaxoSmithKline Pharma looks good at this level. Might see or might give decent return in next couple of 3 to 4 months or 2 to 3 months. One should have in a short-term investment portfolio. So thank you very much, friends, for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.